Okay, in this video, I'm going to be giving you a very simple tip to nail down higher probability entries. Okay, so this is more for if you're a pullback trader and you kind of want to piggyback these moves. I'm going to be talking about that specifically in this video. Now, I used to have a strategy specifically like with this criteria, and if you like look at the some of my later videos, or some of my earlier videos on my YouTube channel, you might find like one or two old videos in there that's going to be very similar in regards to what I'm teaching you here. And it's a very, like I said, it's a very simple, but it's very effective. And it does make a big difference whenever price has his specific signature. Okay. And this is also, kind of where you can get your like higher probability OTE entries, optimal trade entry, and discount entries, because as many of you listening to this, many of you like to enter in a discount. If you're like bullish on something, you like to enter in a discount, meaning below 50% equilibrium within a price range, right? Or of course the opposite if it's a short deal. This tip is going to allow you to have higher probability entries with that. Maybe you're getting tagged out too much. You're getting tagged out. You're consistently just having your stops triggered. This one thing's going to help you a lot. That one tip is having to do with, it needs a liquidity grab. And I'm going to tell you what I mean by that in detail. Like, let's say, for example, you want to enter on a pullback, right? You see right here, like look at my cursor, follow my cursor. You see right here how this pullback right here came down, took liquidity. You see how you have sell side residing over here? See, because there is sell side liquidity residing beneath swing low levels. This is a swing low level. We can all agree on that. And you can see how this came down right here. And it took care of that swing low level. That means that grabbed liquidity. This move lower grabbed liquidity right here. And this was the absolute low. I repeat, the absolute low before price found its bottom there. You see? And then it pushed up. This is that pullback right here that you want to focus on. Look. See how this right here pulled back below 50% of that price range, of where, this is the key thing, pay close attention, of where that key liquidity run happened. And I also want to bring to your attention that, of course, the more significant the liquidity pull, the better. Okay, like in this case, you can see like this move lower right here, it snatched Asian session lows. Asian session begins at 19, and then it begins at 19, it ends at midnight, okay? And this also came down, took out that liquidity. So significant sell side was taken right here on this pullback into London session. What do we call that? We call that a Judas swing. So this thing then has that ramp up higher right here. And then this into New York session provides a pullback continuation type of deal. So take your Fibonacci from that low to that high. Now, of course, discount, optimal trade entry, you got it, right? So the thing is, you need to understand where that liquidity run is at. Like that ran liquidity. This was the absolute low that ran liquidity within this bullish uptrend. May I remind you, within this bullish uptrend, this is what ran the liquidity. This is the absolute low prior to having that big push up. Now you'll get way better entries doing this and entering a discount off these areas. And I'm not saying you got to enter on the first pullback. What you could do in a case like this as well is you could wait for a pullback into a discount within a range like that, and then drop down to like say your 5 minute or your 1 minute, and then look for a little lower time frame shifts within that range, because, well, of course, price is fractal. So then you could go down to like a lower time frame, look for it to pull back into a discount, then look for a lower time frame bullish shift within that discount area. And then you could nail down a little bit more of a precise entry like that, and then just piggyback it up. But the key thing is you want to see that liquidity run. You'll get better results doing this than if you just go off like a single low, for example. I'm sure, and yeah, you can absolutely, because it depends on other factors as well, of course, but you can get nice entries even if it didn't have a liquidity run. I understand that, but your best entries are going to be when it has that criteria. I don't think this one came down to a discount, but this is another example. Look, comes down, snatches sell side right here. This is the absolute low prior to that displacement higher. This is the absolute low. This grab liquidity, and then we got the displacement higher right here. See that? So then when it does pull back into a discount, that's going to be look right here. It pulls back into a discount within the range that previously had that liquidity run. That's where you want to draw your Fibonacci. That's where you want to draw your Fibonacci on the low prior to like that had that liquidity run, right? And then it comes down to a discount. Those are where your higher probability, your highest probability entries are going to be for those of you that want like entries in a discount or optimal trade entry. That's where it's going to be. Okay. And again, I used to have a strategy that specifically revolved around this. Like I would operate like this with Forex, of course. Like to kind of sum that up, what that strategy was. Again, you watch some of my old, I think I got maybe one or two videos because it is a little bit of an older strategy. You just look at some of my oldest videos on the YouTube channel, just go to oldest videos and you'll see probably some Forex reviews, like some of my oldest Forex reviews. You'll see what this is. And it'll really help you gain that full understanding. So I recommend you go search that up. Okay. But the thing is, like, in short, like how I operated with that strategy was, of course, like I would confirm the overall trend was bullish because that's important. Like you want to make sure that you're trading with the trend, of course. It's still in that, like it has that daily momentum and it has like a very strong trend. And then I'm simply going to that intraday chart. Then I'm looking for these areas where a significant liquidity run previously happened or where price, like for example, over here, like took liquidity. I would look for that. I would look for a displacement and I would just piggyback those moves. I would wait for a pullback into a discount and I would piggyback those moves. And that's a solid strategy. It's a solid strategy. That's a very simple way to get higher probability entries, fellas. So understand the trend that you're operating within. Of course, understand where your draw is. I have videos on that. Then you can utilize this to get better entries, higher probability entries. If you enjoyed this video, leave a like, subscribe, and I'll catch you later.